In today's video, I am very excited to present you a new breakout strategy which has become the second best performing one out of more than 60 strategies I have tested so far. Hello everyone, I am TradeSmart, let's get right into it. First I will show you the indicators and their settings, then we will go over the rules for long and short entries. After that I will backtest the strategy on two assets, then I will show you the results with the equity curves. Finally, I will give you a few optimization tips that have the potential to make the strategy even better. This strategy is based on TradePro's one trade a day trading strategy, but with my tweak. So I ask you to pay attention to my entry rules, not to miss any of that. If you want to check out the original video, link is down in the description. Okay, let's see the indicators and the chart setup. First, open up the US 30 1-minute chart. Once you get it, open up the Indicators tab. The first indicator we will use is the vertical line time zones. So type it in the search bar and add this one to your chart. Then go into its settings and change the first time one value to 9 and the second time one value to 9.3. Finally, click on the style settings and uncheck the last two boxes as we won't need those. This way the indicator will draw a vertical line at 9 o'clock and at 9:30. The reason why we need this is because right after 9:30, higher volume starts to come into the market, which can lead to big trending moves. Our aim is to catch those big trending moves, and as you will see, this trading strategy does a great job at it. The second indicator we will use is the stochastic RSI, so type it in the Indicators tab and add it to your chart. We won't change any of the settings, so just leave it as it is. This indicator will be our entry signal indicator. The stochastic RSI does a great job at showing us when the price is at a fair value price point. When the stochastic RSI lines go under the 20 level and crosses up, it is considered as a good entry for a long position. Opposite is true for the short, so when the lines go above the 80 line and crosses down, it will be a short entry. Finally, we need two more indicators for trade management. The first one is the usual NNFX ATR, so type in NNFX ATR and click on this one. Now go into the settings and change the SL value to 2, then click on the style settings. Untick the buy TP, sell TP and the main ATR line, and finally set the line styles to step line. This indicator will give us our starting stop losses. The original strategy was using a rigid stop loss. This means that the original strategy wasn't able to capture the really strong and rapid trending moves. To solve this problem, and what I recommend you do with all of your trend following strategies, is to use a trailing stop loss. This way we can capture even 1 to 5 risk to reward ratio trades. For this purpose we are going to use the super trend indicator. So one last time, open up the Indicators tab and type in super trend. Click on this one. Now we are going to change the values of this indicator to calculate its updated trading stop loss just like the NNFX ATR would. To do that, go into the super trend settings, change the ATR period to 14, the source to close and the ATR multiplier to 2. And with that, our chart is all set up and we can move on to the entry rules. This strategy will allow one trade per day depending on which side the range breakout happens. To know what positions we are allowed to enter, first we need to highlight the highest and the lowest point between the 9 and the 9:30 trading session. In this session, here is the highest point. And as you can see, here is the lowest point. This is going to be the range from which the price needs to break out. If the first range breakout with a candle close happens to the upside, we only allow to enter into a long position. If the opposite happens, so the first level which gets broken with a candle close is the lowest point of the 9 to 9:30 session, we can only enter into a short position. For a long entry, the first thing we need to see is the breakout to the upside. Now there are two possible entry options, whichever plays out first, we will go with that one. The first option, if on the breakout candle we had a cross up on the stochastic RSI that happened within the last 3 candles, we can enter into a long position. Keep in mind that we only consider a stochastic RSI cross valid if previously both of the lines have gone below the 20 level. Here, as you can see, we had a cross up and just 3 candles later the range breakout to the upside happened. So this is a valid long entry point. The second option is that we just wait for the next stochastic cross-up after both of the lines have gone under the 20 level. Whichever comes first, we enter on it. As you can see, here we got a nice cross-up, so we can enter into a long position. The stop loss will go to the NNFX ATR line and we leave the take profit level open. In case the super trend, which is our trailing stop loss, is green on the entry candle, the super trend will become our new stop loss. If the super trend is colored red on the entry candle, we will still be entering into a long position, but our stop loss will be the initial NNFX ATR level until the super trend turns green. Once the super trend has turned green, the super trend will be our new stop loss level moving forward. We will exit the position once the candle closes below the super trend and the super trend turns red. As you can see, this was a great winning trade. I hope I was able to make this as clear as possible. If not, feel free to ask me anything down in the comment section. If you find this content valuable and want to see more, don't forget to drop a like, subscribe if you haven't already, and turn on the notification bell so you won't miss any of my upcoming videos, script giveaways and trading scripts. Now let's see what we need to see for a short position. For a short, we look for the opposite. The first thing we need to see is that the first breakout of the range happens to the downside. If it does, we have two options moving forward. If we had a stochastic cross down within the last 3 candles, we can enter into a short position. If not, then we wait until the stochastic line goes above the 80 line and then crosses down. Whichever happens first, we enter into a short position on it. Stop loss will go to the NNFX ATR line, and if the super trend is red on the entry candle, then the super trend will be our stop loss. But if the super trend is green on the entry candle, then our stop loss will be the NNFX ATR until the super trend turns red. Once the super trend is red, it will be our new trading stop loss. We will exit the position once the candle closes above the super trend, so when the super trend turns green. Keep in mind we can only take the first valid entry after the range breakout. So this strategy will give you 1 trade opportunity per day. I hope everything was clear. Now let's see the 2 backtests. First, I will backtest the strategy on the US 30 index, then on the US 100 index. I do it this way to increase the number of trades. And the results are in. If you are new to TradeSmart, we are doing strategy backtests and we code the best performing strategies to free and paid TradingView strategy scripts to make it easier for you to trade. If you want to check them out, check out the playlist I made of all of our currently available trading scripts by clicking on the pop-up in the top right corner, or you can find the link down in the description. After 41 trades on the US 100 1-minute chart with a variable risk-to-reward ratio, we had 21 winners and 20 losers, which brings us to a total of 27.21% net profit. As you can see, these results were achieved by only 41 trades with a 1% risk per trade. If we project the results to 100 trades expecting the same results, we would have got 67.4% net profit, which puts this strategy to the 2nd place on our strategy ranking sheet based on net profit after 100 trades. Time to complete the 41 trades was 41 days. Now let's go over the other backtest, then I will show you the equity curves, which is one of the most important valuation of a strategy's reliability. After 31 trades on the US 31-minute chart with a variable risk-to-reward ratio, we had 15 winners and 14 losers, which brings us to a total of 20.06% net profit. As you can see, these results were achieved by only 31 trades with a 1% risk per trade. If we do the same thing as we did before, so we project the results to 100 trades, expecting the same results, we would have got a 64.7% net profit, which puts this strategy to the 3rd place on our strategy ranking sheet based on net profit after 100 trades. Time to complete the 31 trades was 31 days. Well, what can I say? These results are amazing considering almost all the important factors like profit factor, net profit, time to complete. But there is one problem, which is the total number of trades. What can be a quite common probability with having such a low sample size is that we just caught a market with a nicely trending market condition. That is why what I always recommend to you is to trust a strategy backtest more with a larger sample size over one that has only a few trades. And also keep in mind that historical results does not guarantee future results. And now let's see the equity curves. Generally, what we are looking for in an equity curve is to have the lowest drawdowns and to trend steadily up. So basically what we want to see is a steadily uptrending or exponentially uptrending curve. Here you can see the equity curve for trades took on the US 100 chart. Right out of the gate we can see that this is a very nice steadily uptrending equity curve. Of course it has its drawdowns, but these drawdowns are not bigger than 4%, which is well inside my maximum drawdown tolerance of 10% that I am still comfortable with. With the trend following strategy, drawdowns usually occur when the strategy have to face a sideways or ranging market period. Now there are three outcomes that can be seen on the equity curve. If the strategy is not good at all, the equity line will start to go down and will have a big drawdown. If the strategy is a decent one, the drawdown will be low compared to the growing periods. And if the strategy is extraordinary, there either won't be a drawdown or sideways period visible on the equity curve, or the curve will have a sideways, close to zero drawdown part. Finally, let's see the equity curve for the trades taken on the US 30 chart. This equity curve looked quite similar to the first one, but after the first nice uptrending part, we entered into a more normalized and slower uptrending phase. This should not be a problem until the general trend of the equity curve points to the upside. In this case, the maximum drawdown wasn't bigger, but it lasted around 3 days longer. Finally, let me give you a few optimization tips which you can try out for yourself and see if it improves the strategy or not. The first one is the following. If you don't get a valid signal, but a relatively big move have already happened into your desired direction, it might be a good idea to skip that day's entry, as there is a higher probability that the nice trending move that you were looking for had already happened. To make this an objective rule, find a few trending moves that you would have been satisfied with, measure their percentage different from bottom to top or from top to bottom depending on if you are looking for long or short positions, and find the average percentage of these moves. In the future, if you see a trending move that exceeds this average and you haven't got a valid entry signal yet, you might be better off to skip taking any trades that day. Try it out and let me know in the comments what average movement percentage you found to be the sweet spot. The second optimization is to look for an entry indicator, as I am pretty sure that the stochastic RSI is not the absolute best for giving you entries. It might also be a good idea to use not one but two entry signal indicators with a few candle tolerances. To get some inspiration and ideas for your entry signal indicator, check out the best entry signal indicator part 2 video, which I made recently. You can find it linked down in the description, or just click on the pop-up in the top right corner. And finally, it is always a go-to optimization tip to try out different risk bases. You can do this by changing the SL value of the NNFX ATR and adjusting the supertrend trailing stop loss accordingly. After that, you just retake all the entries with the new stop losses and see for yourself if you found a better stop loss setup. What do you think? Should we code this strategy into a trading script? Let us know with a yes or no comment. And that wraps up today's video. If you like this video, leave a like and subscribe. If you want to try out our highly customizable trading scripts, optimizations, or if you want to exchange ideas about trading with me or with the other TradeSmart team members or with the other community members, check out our Patreon page and become a Smart Trader tier member today. As always, thank you all for watching, have an amazing day, and see you in the next video.